Hey guys, welcome back to the channel. Today we're conducting Sony Stock Analysis. The Sony Group Corporation, ticker is Sony. This stock is available on the New York Stock Exchange, but of course is a Japanese company. This company announced yesterday, or confirmed should I say, because they announced it a little bit earlier on, that they are entering the electronic vehicle marketplace in an absolutely stunning move for the company. This company is so diverse, it is into absolutely everything, and I'm going to show you exactly what later on in the video. They're also big into the metaverse. They're developing the virtual reality products for the PS5 and later iterations of the PlayStation. So this company is into the hottest topics at the moment, as well as having sectors all over the place generating significant growth. It is also, believe it or not, a dividend company, a growing dividend company, and it is also going to potentially provide a serious amount of growth over the coming years as well, especially if getting into the electronic vehicle segment benefits the company. So let's take a look, let's get in there and conduct this analysis. Catch you in there. Hey guys, welcome into the video. Let's get some of the basics out the way first. So the share price is $128 a share. Actually, pre-market it's down 3% and has a market cap of $165 billion. It is currently down from its most recent high on January the 5th of $131, and it's sat, as I've already mentioned. Company pays a small dividend of 0.4%. It has recently beaten its most recent EPSs, not by a lot in quarter 3, but at least it has beaten its what it's set out to do, and its annual revenue is sort of, for such a well-established company, it is sort of alongside the usual what you would expect. Not massively growing just yet, but still significant revenue to be had, and profit margins are looking good as well. That is of course in Japanese yen there, not US dollars. The company is rated extremely highly as a buy, a 1.2 buy rating, with an average price target of $154 per share, which is significantly up on where its current price is. Its low is actually 141 and a high of 184. And with getting into the electronic vehicle sector, this is a share price that could easily come on leaps and bounds on there. It's going to take a little while to do, but this company does generally deliver on what it sets out to do, and it's not afraid of committing significant capital to do so as well. And it was recently upgraded on the 28th of the 7th by Morgan Stanley to overweight, which is a stock upgrade. As you can see, it has been covered quite heftily on Yahoo Finance that the company is getting into the EV sector, and has actually confirmed this now. And I'm literally just about to show you the reveal event. So let's hop on to that now. So on this article here, Sony pivots into cars with Sony Mobility and the vision for the Vision S SUV prototype at CES 2022. So here is just exactly what it's getting into. This is the big reveal, it driving out onto stage and being talked about by the senior management right there. So you can see that it's a 4x4 and it looks particularly good. It's quite an attractive looking car. Obviously more is to come from this company in terms of the details over the coming months and quarters, but it's very impressive to see a company that isn't a car company, hasn't been a car company in its lifetime before, or at least not very recently, getting right into it. And of course, because it provides a lot of electronic stuff anyway, making an electronic car shouldn't be too much harder for the company. Yes, there's some expertise to get involved in, but this company is predominantly an electronics manufacturing company, so they can deliver some of their expertise and streamline some synergies into building the actual car itself, which is absolutely fantastic. It is a particularly good, efficient company over in Japan, and obviously, as you've seen, it's just dominates everything and makes everything all over the world. So you can see that they can get involved in this here. There's some commentary just on here. You can go on YouTube and actually look at some of the vehicles themselves. We got that looks a little bit like the Porsche side of things, the Porsche electronic vehicle, and this looks a little bit like a Tesla model Model X, if you ask me as well. Not that that necessarily means it's good or bad for the car, but they look quite attractive if you ask me. So I'm very interested to see how this goes about. The interior looks great as well. Get on YouTube, get and have a look at all of these. It's absolutely fantastic news for this company. If they can deliver on this product, the market cap of this company is going to fly upwards significantly. Then the next thing that they were looking at is the PSVR 2 headset for the PlayStation 5. This is the Metaverse, another hot topic right at the moment for investors. And this company is getting massively involved in that, developing the VR virtual reality for the PS5 and later iterations of the company. And we all know that this is where video gaming is potentially heading. You've seen some of the videos on YouTube, on Instagram, of people being fully VR'd up and able to walk around on the spot on these special pads that they've got. This is all going to come together in the metaverse over the next coming years, and Sony is riding the top of that curve as well. It's a little bit missed out. If you look at people talking about the metaverse, I've done it myself in one of my most recent videos. Didn't even consider Sony at all. I had Microsoft in the space, had Nvidia, had some of the more obvious topics, but Sony has sort of been missed out to a degree. So this is a video reminding people of that. The company is financially pretty strong, to be fair. They're not in a great deal of debt, and they have an awful lot of cash flow. So you've got cash flow there of 590 million yen. Now you get about 100 yen to the dollar, so you can work that out roughly by doing the maths yourself. But they are in positive cash flow territory despite doing an awful lot of investing, paying down of debt. They're particularly a well managed company, and that is reassuring as an investor. In the most recent quarter, you can see that they are growing slightly. There has been some good changes in their positive sales, but mainly what I wanted to show, because you can get at this anytime, guys, and like you say, there is significant growth and adjusted revenue. What I wanted to show you here is just the revenue and the sectors that this company is in. So they've got the game and the network services. They have a music sector, pictures. Obviously Spider-Man came out recently. Sony had a lot to do with that, as well as collaborating with Disney to do that, of course, and Marvel. They've got electronic products and solutions, imaging and sensing solutions, financial services, and then other. And soon you'll be potentially be able to add to that the electronic vehicle segment and sector, which could generate a significant amount of money as well. It's going to take a lot of investment to start up, but then it's going to hopefully generate a massive return. And then the virtual reality side of things and the metaverse will sit nicely and help grow its game and network services right here, and also the imaging and sensing solutions as well, which is absolutely fantastic to see. If you see the earnings date here, they've been pretty much on course with what they've forecast all the way through. The most recent quarter, they literally just crept over the line, but usually they typically beat what they say quite well indeed, which is pretty good. The next revenue is going to be on the earnings release date. It's going to be on the 3rd of Feb, so we will watch out for that nicely. But this company is very, very strong. It is looking to grow. It is looking to get into the electronic vehicle sector, which is a bold move. It is expanding itself and making itself a player in the metaverse, as well as everything else that it does in its TVs, its phones, its headphones, all of that sort of things, its motion pictures. This company is just an absolute juggernaut, and I can't believe that I've missed it personally, because I'm really considering taking on a position in this company, especially as it pays a small dividend as well, which is great. It's not going to break the bank, but if you have a quick look here, for your 100 shares you'd get $26.55. Obviously that would be a significant position to own 100 shares, and it has a yield of about 0.4%, but this has been growing pretty well since 2016. They skipped 2015, but since 2016 it has been growing quite nicely all the way through to 2021, and you can see the changes here. Obviously 100% up when they started again in 2016, but it has grown, usually apart from in 2017, it's grown in the high double digits, which is pretty good to me. And so as a dividend play, this could be literally a dividend growth and a growth stock. This company potentially ticks all the boxes. We've seen what analysts predict that this company could soon get to, and there's no other ratings out there than strong buy at the moment, apart from the one that says buy, which makes it a 1.2. But that is an absolute excellent sign, and eventually the market cap of this company is going to be rewarded for doing so, especially when they start getting cars down the production line from the concept phase and actually supplying them to customers.